Good morning and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team, joined as always by Joseph Dion of Appley Home Loans. And we're back into grinding the news out. Some tough love yesterday. Tough love.
What?
CPI came in very hot, kind of cooled things off a little bit.
Yep, that happened.
But we got some big guys out there saying, don't expect rate cuts this year. Jamie Dimon is telling everyone you're pricing stuff in that you're not supposed to right now. And then Gallup came out with a very interesting report on Monday that I didn't see anywhere in the news. But we'll take a look at that one. That one we'll keep close to our chest because it's going to shock a lot of people, I think, where the housing market and the sentiment is sitting right now. Mm-hmm. So let's hop into our day from yesterday, which was CPI number came in, and boy, did it come in hot.
I mean, the Feds in December of last year were like, we've conquered this thing, inflation. And then what happened in January? They're like, it's transitory. Like, this is just, it's seasonal. It's going to go away. February, it's seasonal. And then March, all of a sudden, we can't say it's seasonal anymore.
No, it's going up and up and up. I mean, the core services, which that was one of the big ones that Powell wants to see drop, we jumped 5.6% annually. And when you look at the graphs, really since August of last year, that's when we hit our low point on inflation. Since then, we've got a consistent growth. And that's starting to make a lot of people get a little bit nervous, which I can understand completely. Because even when we go down to the core CPI, when you take out food and energy, we still had a 4.4% growth. And again, you look at the graph. Here's August. Since August, steady increase in inflation. And that just rocked the markets yesterday. I mean, I felt bad for your office. I'm like, I wonder if we got to grab anybody off the edge, because
it was it was not fun. It was not fun at all.
We had basically gotten down here. We were sitting like 4.34. It's gone up a little bit, in the past couple of weeks. But we're you could still hold probably pretty close to 7, maybe just a hair over 7. And then basically we jumped 2 basis points. And this morning, my gosh, we're back up again, sitting up at 5.58% on the 10-year Treasury.
Oh, look at that. A little bit of movement. It was live movement. The big thing that I saw with this was it went kind of in no man's land. It passed all it passed resistance. It passed where
it didn't stop. It just minute that report came out yesterday, you can see it. I mean, look at this jump. You went from 4.34 to 4.5 basically in minutes.
Yeah. It was absolutely insane to see the jump that we did. The only positive behind it was at least it was pre-market before anything was live, which, you always think, okay, well, you know what? We see the knee-jerk reaction. We're going to get a little bit of a pullback. We'll recover some. My big concern into yesterday was we didn't see any recovery really,
No.
and then we actually got a little bit worse as the day went on. Before after hours, we started to see improvement, right? And that's where what was interesting was I was like, okay, let's see where we are. We were talking to our team. We did, we do our little different things. And then we were like, hey, at 1:00 we have, we have the bond auction. There was a bond auction at 1:00. And we're like, we'll see how, and right after that happened, it was not good. So it was just very interesting to see kind of, hey, where's everything sitting at? Where are we at? What's moving forward? And that's where we had to sit there and pause and go, okay, we're gonna put yesterday behind us. That the Feds are never going to allow 2 reports to miss in a row.
Right.
So I was like, I knew that, CPI was the market mover, but PPI, like, that's not usually a market mover, and they were going to come back and it was going to save the day for us. And sure enough, we kind of, jokingly got, all of a sudden PPI comes in better than expected.
Yeah. Well, I mean, this was PPI never moves the bond market quite like CPI does.
No.
But I think it eased a lot of people's anxiety. I think that's the best word to use, is anxiety. Because yesterday, I mean, people were just, holy, it was a shock. I think it was a shock to a lot of people that it came in that hot. I thought it would come in a little bit higher. I didn't think as high as it did either. I mean, this morning is actually kind of good news because PPI, of course, always takes a little bit of time to translate into the consumer price index. Yep. So our March actually came in a full point less than what they expected. They expected 0.3, and we came in at 0.2. So a little ease on the producers, but as you can see from the 10-year we were just looking at, it's not enough to move that market at all. We're still sitting very neutral from the CPI yesterday. And I think the other biggest thing is what you're starting to hear out there. And, Jamie Dimon has come out and he put this in his letter to the company is, that he believes the odds are a lot lower that rates might fall. He feels that too many people have priced too many rate cuts and a soft landing into the system right now. They're preparing for a range of interest rates from 2 to 8%. That's a wide range.
2 to 8, like that's a wide range.
That's almost like Powell covering his butt in some of his speeches, but it's telling me they're not sure where it's going to go. But they're actually planning for the worst out there right now. When you see fellow realtors, other lenders coming out saying, "Hey, don't worry, guys, rates are going to fall this year. Rates are going to fall this year." It's like, you need to be quiet because you're not looking at the totality of the entire system. There's just nothing here that puts any type of downward pressure on the interest rates. And they've always said higher, longer. We start getting into, what everybody's looking at right now. I mean, there's May's gone. May's gone. No rates. Say goodbye. June, we jumped. Last week, we're at 59%. No cuts. We have jumped to 79%. That's a huge jump. Yeah. So people are starting to say, hey, June's off the boards too. More and more people are feeling June is off the board. Yep. Then even when you get into July now, you've jumped to 51% of people saying that rate cuts are off the board. And that's a jump from 19%. Yesterday it was actually 57%.
Okay. So a little bit pullback there. What have you and I kind of been joking about? It's going to be 3 rate cuts until it's not 3 rate cuts.
3 rate cuts.
Like, they're not going to say that they're not going to be able to do it until they absolutely can't do it. Right? Yeah.
When I still couldn't find where Powell said it, I looked all over the place. 6 rate cuts. We're going to have 6 rate cuts this year. It's going to cause everything to boom. Yes, the Fed said we're having 6 rate cuts. I was like, where? Hold on a second. I've got the transcripts. I can't find it. I couldn't find it anywhere. And it's like, why would, to have 6 rate cuts, we would have to have a total crash in the market, to have a complete crash in the market. Not saying we're not going to, but we would have to. And the more this drags on, the more people are starting to realize, wow, this is gonna stay this way longer. And I really felt like we were starting to get where people were starting to realize, hey, if I'm getting that 6.875, 7%, okay, that's where I'm going to be for now.
Yep.
That's where I'm going to be for now. And you saw it in our numbers that, things were starting to tick up. We're, not great growth, but ticking up, a few more sales happening than previously.
Yep.
And this I think is just going to knock a bunch of people back on their butts again, saying I'm off. I'm not going to do it. But it's so hard when you also know there's so much bent up frustration. Interesting numbers I saw. Orlando is one of the top in the country for cash transactions. 42% of the transactions so far this year in Orlando have been cash.
42%? Holy
40.
So we're talking 2 out of 5.
2 out of 5. Yep.
Wow.
42% so far this year.
That's absolutely craziness.
Yep. But then on the other side of it, we're also number 5. Tampa's number 1 for price decreases right now. They have something like 30% of their listings have had price decreases.
Wow.
In the past month.
That's a lot.
We're right behind them at, I believe, around 20%.
Okay.
So that's a lot. That's a lot of price decreases that are going on. But the big one, then this kind of got me, and I can't believe we haven't seen any news on this, is this Gallup came out with this earlier this week. The views on the U.S. housing market, and it reached new depths. How many people, what percentage do you think right now feels a good time to buy?
It's a good time to buy. Let's see. Home prices are the highest that they've ever been. Uncertainty in the job market, but the economy seems to be booming but we're not feeling it when we're starting to think about groceries as being a luxury item. So,
hey, Joe,
did they?
They went up a nickel a pound.
So you sit there and it's just like, you look at that, it's got to be low. Like what? Maybe 40%, 30%?
No, 21%.
So 1 out of 5 people think it's a good time to buy.
That's it. And when you look at
that 1 out of 5, those must be the investors. Maybe. I don't know. Is it a good time to buy as an investor?
Or it's the cash buyers.
There you go.
It's the cash buyers, because what can they do? They can go and say, hey, no big deal. I've got cash. You don't like it? I'm just going to go over here, to a similar house in the subdivision. Right? And I'm going to offer them this. And that's where we're seeing the price decreases come out. But it also makes a lot of sense because, what are all the numbers we've seen? You've got to make $140,000 a year to afford the average home, and the median income is $84,000. So I completely understand the pessimism that is going on out there. I've got several people who own short-term rentals right now in the Disney area, and their bookings are dead, absolutely dead. Which this time of year, you're getting close. Just finished up with spring break. A lot of them were vacant during spring break,
which is crazy.
Yep. And you're coming in to start vacation time, and they've got no bookings going into end of May, June, and July right now. So they're getting a little nervous because they're going to have to carry these mortgages without any income to offset it.
Yep.
So this 21% feeling that it's a good time to buy makes a lot of sense.
Yeah.
Makes a lot of sense. But as sellers, you got to be aware of this. That just means your pool of buyers is just shrinking up, So you've got to be, you got to be more aggressive in your pricing, be more creative in how to get a meeting of the minds. And that's where, us representing the buyer side, we need to know this so that we can say to them, hey, who else you got looking at this thing? Your house is on the market now for 65 days. Do you really want to continue to own it, or do you want to sell it? We're willing to buy it, but we're not going to overpay anymore. We don't have to overpay. In fact, we should be getting a rather good deal for our clients now. And I think that's going into the summer. I think that's what we're going to see is, I don't see the multiple offers, anything like that, which I find kind of interesting because with the changes, which still haven't been ratified or signed off on by the judge, because the Department of Justice said they want to reopen all the cases.
That's crazy. DJT, you would have thought that would have already been worked out with the DJ.
Yeah. Hey, Department of Justice, you want to see my history? Be my guest. I'll send you my past 4 years, and I'll show you what my average is.
Yep.
You know, all of us as realtors should actually just do a spreadsheet, send to the Department of Justice. Here, you want to see how much we didn't collaborate? Here you go. Here's my sales for the past 4 years, and here's what I made.
Yeah.
You know?
I mean, they should be all pretty easy to compile. I mean, the numbers all go into the MLS, don't they?
Yeah, they all go into the MLS. Every broker has it. You know, every broker. I was watching another podcast, and they had gone through theirs, and come to find out, they're up in Massachusetts. Their average, their compensation average was 2.21% for all their agents.
Well, that doesn't sound like 3% each side.
They missed the phone call, Joe, on Monday morning.
The Monday morning power hour.
Yes, exactly. They must have missed it. Yeah,
it happens. They missed it for 52 weeks consecutively.
So, I mean, that's where our market's going, and it's going to be tight. It's if you're in the market, I think you're going to have some big advantages. Knowledge of the market is going to be key.
Yep,
it's truly going to be key, because if you know, hey, there's only 21% of the people out there who actually want to buy a house, so I'm one of the few. I'm gonna use that. I'm gonna use that in my negotiations.
Exactly.
You know?
Exactly.
So let's hop into our numbers for Orlando for the week. And we pulled back about 100 units from the previous week, which is interesting because it was the end of the month. So you thought that might go up a little bit, decreased a little bit, but you see that fluctuate all the time, you know, up and down a little bit. You get a couple houses a little bit higher and it pulls it up, a couple houses a little bit lower, pulls it down.
Yep.
Took a nice jump, increased by 170 homes last week. That's condos just chugging along right at that, you know, 130, 150 range, right in there. And the number of those units have continued to increase. And then we come in and look at our weekly sales. This was interesting that there were 11 short sales last week.
11 short sales. Interesting.
And the reason why I look at that is our friend John has a short sale coming up. And what it is, it's a person who bought the home literally about a year ago in a new subdivision. Unfortunately, gentleman went through a divorce and now is working in Italy and just can't pay for the house, and actually at this point doesn't want it, you know. So we've actually started the paperwork for the short sale on that one, because the builders, there's still inventory of the builders have inventory, and in that subdivision I think they're offering 3.99%, the 3-2-1 buy down.
Oh my gosh.
So how do you compete against that?
How do you compete? You can't sell.
Yeah.
I can buy the division brand new and get this, or I can take your deal.
Yes.
No, you're done.
Yeah, you're done. So it makes perfect sense, you know, because he doesn't want the foreclosure. He works in the government, so anything can affect his credit. So we're going to do the short sale for him. You have inventories holding pretty steady, just over 3. And then our original list to sales price, you know, moved up a little bit to about 95%. And that recovery actually came from the over $1 million. They actually bounced back from last week.
Woo.
That was a beating last week that they took. Somebody just decided, I want out.
I got to get out.
Yeah. You know, then when we look at it graphically, you know, our period average sitting at 355. That is still a super low average for a community of our size. Then you see here, days on market dropped a little bit. And then our inventory is taking a jump back up. We're actually up 7% from the beginning of the year, which that's a pretty good increase. You know, that means there's a lot more opportunities out there for buyers to negotiate, which they haven't had really in a couple different years. Then we hop into our condos, and again, they're really not moving anywhere. We got 4.7 months worth of inventory, and then we're sitting down around 93% original list to sales, and days on market is starting to really jump up there. We're up to 65 days. The last time we saw it that high was back in, I believe, October of last year when we took that other spike in interest rates. We saw both single family and condos jump up quite a bit.
Okay.
Then the weekly sales, 115 is your period average.
It's pretty, at least we trend above it, right?
Yeah. For the past couple of weeks.
Slowly bringing it up.
Yeah. But then here you see graphically, days on market, slowly creeping back up. And we're actually up 16% in our inventory since the beginning of the year. And last year's inventory of condos was up, I think we're up 25% from January of the previous year. So the condo market inventory just continues to increase and increase and increase.
That's a lot, and that settled down anytime soon.
No, we're not. It's just there's a lot of things that are headwinds against the condo market right now, and I don't know what the solution is because of the insurance costs going up, interest rates higher, some units not even being able to be qualified for lending. So a lot of headwinds against that market. But thank you for joining us today. Please join us every Thursday. Please like, subscribe, share this out with your friends so you can stay on top of the market and know everything that's affecting it. Thanks a lot, Joe. Appreciate your time this morning. As always, take care. Have a blessed day, everybody. Bye-bye.